How's it going, everyone? So here is the anticipating or predicting support resistance breaking or holding video that we were talking about the other day on the live stream. So we're going to cover lots of stuff. We're going to do poor market conditions, when you should be trading, when you shouldn't, how to identify it before it happens, resistance breaking, support breaking. We got lots of examples to go through today. So we're going to really get into that. And hopefully by the end of this, we'll have a better understanding of how to read candles, how to anticipate and predict where they're going to go based on how the candle forms. So first one we're going to look at is how to anticipate market conditions using price action when trading with momentum. So as we can see here, price is clearly ranging and not doing anything we want to see. But if we came to the chart and this was the last candle we saw, maybe we would look to see a support formed here or maybe something over here to then have price continue going up in our direction. But then we get this candle printed next. What we need to notice is that it's lower than this one and also no bottom wick as well. This next one forms, kind of makes a lower low, but this one doesn't have a bottom wick. So we could just say this one is sort of creating that wick for that candle, which would then relate to a higher time frame candle now having a bottom wick. And then we see a lower high to this previous one here. So next candle again, we see it break above this bullish candle, which would mean higher high and a higher low. So price should go up, but it doesn't, and it goes bearish. So now we see this candle, we'll clear this up. We see this candle sort of disrespecting these three candles. So when you start to see highs and lows not really being respected like that, or they're breaking highs or breaking lows and then coming back and not going in the direction it told you it was going to go, that's when you need to start to think, okay, maybe price isn't going to move so great just yet. So then we keep watching. We see another lower low, lower high to this previous candle here. And now we see another higher high and higher low to the previous candle as well again. So it's still just doing really messy stuff. Now next candle, we see lower high, but we see a higher low. And now we have 1, 2, 3 higher lows in a row. So maybe price is going to start to try and go up now. We'll see. And if we look at these previous candles, it's kind of just inching its way up. It hasn't really been able to come down yet. This area was just really stuck in here. And now that we're sort of forming this way in this area here, maybe we do get a break to the top again. So then after this bearish one, we see this next bullish one, about the same height, not really any higher, but again, another higher low. So then we see this candle. Now you could either wait for it to close above, or you could try to catch it on as it's going and anticipate that all these higher lows that we've created are telling you that price is going to go up. So you could say, all right, if we get above this bearish candle or this one or any of these wicks here, price should continue. Because what it's done inside of this box area is it's kind of just came up, came down. It's kind of done something like that. So the whole time it's still going up. It's just not going up how we typically like to see price going up. So for something like this, when you're waiting for that momentum, or you're trying to anticipate that there is momentum, the way you can look at it is if there is no momentum to push price out of this area, you're not going to get above these wicks here. It's not going to happen because the price is going to go down. That's what's going to happen. So when you're looking at this, it's just price isn't really going anywhere, but it's not going down, and it's kind of gradually inching up based on all those higher lows. And that's how you could kind of anticipate that. And then once we do push up, you see another higher low, higher high. And then you could have either caught it up here or just as it was breaking out. Stops could have been on the candle, under support. That would be based on your trading. But that's how we could kind of anticipate some sort of volume to be in the market? Is it making highs above everything, or continuing to make higher highs and higher lows, or vice versa, lower lows and lower highs? So the next one, we're going to how to anticipate price breaking through a resistance, you could say. So again, we see this bearish candle here, kind of signifying resistance. Maybe this wick had something to do with why we formed this resistance here. So maybe that's why. But what's important is what happens once we get into this area. So we came up with a really strong bullish candle. We went bearish, and then this wick made a lower high, or it was the same here and it didn't make a higher high. So, okay, no real further confirmation to continue up yet. And then we look at the bottoms of the candles. So on the way up, higher low, higher low, higher low. Now we see this one here making a lower low and not making any higher highs anymore. So when we came up, we made higher highs. And then this one kind of made a lower high. This one pushed right up to the high and did not break. And now it's making lower lows. So maybe price is going to come down to where, who knows? Maybe it comes down in here, can't really be completely perfect on that, but we can look at the candles and see when they're going to tell us. So then this candle made our lower low. Now we have another lower high to this wick here. And now this one made another lower low to this previous wick here. So maybe we're going to keep coming down again. Because remember, we haven't seen what these candles are doing yet. Because if this were live, we would only see this current one, and we're just walking through candle by candle. So now this next candle, we see a higher low to this previous. It's closing bullish, and it made a higher high to the previous. It's very slight, but there is a higher high there. So if that's true, when these candles made higher highs and higher lows, price went to the upside. So, and we are coming into this resistance. So if we can make higher highs and higher lows, maybe we get a trade from this bottom side up to resistance, and then we kind of see what happens there. So this one did actually close above, but with GJ, or this is actually EJ, but we see lots of fake outs. So the way you can kind of know that this is not going to be a fake out is look at the bottoms of the candles. As we came into resistance, it was actually broken, and we continued to make higher lows and higher highs, and price pushed through resistance. So that's kind of how you can tell that we pushed through, because when we came to it the first time, we saw how we reacted. We made lower lows and lower highs. Then we pushed up to it again, and we made higher highs and higher lows, meaning we break through resistance. Next one is same thing, but we're going to look at support. So when support's formed, like we just saw, it's the same thing if it's breaking through resistance. Support forms with higher highs and higher lows. Higher highs, higher lows. This one made a high, higher low, broke this high, came here, higher low again, higher high again, price went up. That would have been a really, really simple trade to execute on. And now price is coming back down to support. So if we look at these candles, when these candles came near this area, whether you have it marked here or you have it marked up here, regardless, look at what happened when they formed. We came down to here, didn't get below here, and then we made a higher low and a higher high again. So if that's support, this next candle should be higher low, higher high. And we should go back up to resistance, technically, if that's where price is going. But we notice price is kind of got momentum to the downside. So maybe this was just our lower high. But this last time we came to support here, we pushed up. So now we got to look at the candles again. And now we're seeing the candles printing lower highs and lower lows again to the previous. Okay, maybe we're going to break, but we didn't close underneath. So if you're the type of person that it needs to close underneath, that's not that's not a break for you. But just like we saw a breakthrough support, and when we came here last time, we made higher highs and higher lows and went up. So if this is going to hold, this low will be respected and price will push up, make a higher high, whether it breaks it on the next candle or whatnot. But price will continue to push up and respect this low if support is going to hold. But on the next candle, we see lower high again and another lower low. Same thing again, another lower high and then another lower low. So when you see that happening, there's a really good chance price is going to continue in that direction. Because when price goes down, it's lower low, lower high. When price goes up, it's higher high and higher low, with a few exceptions of sometimes you get that random wick that just disregards everything, breaks above, breaks below everything, and then it comes back, and then it continues with respecting highs and lows of previous candles to go in that direction. So sometimes it does catch you and take you out, but the probability is definitely on the side of these candles being respected. So next, anticipating volume in a lower session, trading with the overall direction. So this was Asian session. I think this was the other day. We see prices obviously pushing to the downside. And then when we come into Asian, see this one, we do have that lower low, lower high to the previous, but there's no volume in this time right now, or there's not as much as during like a New York or an Asian session or a London session. So we can kind of disregard these three candles. And Asian volume came in right at the close of this candle. So this candle's bullish at support, which should mean price should go up. And if price is going to go up, then we respect this and we break this. But there's a little bit more information. This high here is lower than here. So the high that's in this little area between these 4 hours of price, this is technically a lower high to that previous. And if we look at the bottoms, this bullish candle made a lower low to the previous 2 hours, but also respected this one. So we could say lower low, lower high, but it's bullish at support and momentum is looking like it is to the downside. So the direction this is going to go is if we break this top and respect this bottom, price will go up with higher highs and higher lows. But if we look, we never broke the high, we broke the low, and price continued down. So this is an hourly candle. Hourly closes are pretty strong closes. So we could say that this hourly bullish close is a really good indication that price should continue up to whatever target, whether it be here or some target up here, whatever the target may be. A good bullish hourly candle at support, with possibly some room up to here at least, should push price to the upside, because bullish means price is going up. But if price is breaking the low of that candle and respecting the high, you got to ask, why is it doing that? And then the answer is just price is going down. It's that simple. So that is how you can kind of anticipate that, and as well as the volume coming in. So if there's no volume, this hourly candle will not just be completely disregarded like it was. It's going to do more candles like what we're seeing in here, and it's going to sort of stay in between this area versus respecting the low or respecting the high and then breaking the low. You're not going to see that happening when there's not a ton of volume. Like if we look over here, this was in an Asian session. There wasn't a ton of volume. We stayed in between the candles and really didn't go anywhere. As well as these candles aren't closing super strong either, but this one did close fairly strong. And then we kind of disrespected it. But looking at the candles and the wicks of where price, the highs and lows that were created, you'd have been able to be a part of this, whether you got in at a break here, or like if there was a 30-minute break up here, you could have did that as well. But then you're kind of selling against a bullish hourly candle, which wouldn't really it might not be the best trade. especially with this being a decent candle. So ideally down here would have been better. But that's how you can kind of anticipate some volume for the Asian session at least. And then a break and a retest. So a lot of people do breaks and retests for their trades. So this zone could have really been marked anywhere. I just marked it where it all kind of lined up. You would have figured it out after it happened. But if we didn't know the zone was either here or here, once these two candles were formed, we would have been able to see. So we kind of pushed away and we came back to this area we were most recently having resistance at. And the same thing, if this is going to make support, we're going to see higher highs and higher lows. Just like when we pushed up here from the bottom, made higher lows. And this one, even this bearish candle made a higher high to the previous, as well as a higher low to that one right there. And price went up. And then as we went up, we made a higher low, a higher high, another higher low, higher high, higher high, higher low. Now we're getting lower highs and lower lows. So price is going to start coming down a little bit. And then we see this candle here. So whether you had your zone here or if you had it right here, this one could have technically closed underneath your zone, which would maybe say you take sells down to here if that's how you trade, or you closed right above and now you're going to wait for a bullish candle. But as you know, especially on GJ, sometimes it's really aggressive and it doesn't give you time to enter if you wait for a close, if you wait for 30-minute or 1 hour. So what you could say is we have a pretty good, pretty strong bearish 30-minute close. And then we see this is kind of the low we made. So if we're going to keep coming down, this is going to be respected and that low will be broken. And then we'll maybe go bullish on that candle or the next candle. But what happens is we make a higher low and then we make a higher high and price goes up. So you could say once this came into that area where you possibly could form support, or if you're just waiting for support to form somewhere, all you would need to look for are higher highs and higher lows. So with this bearish 30-minute, if price gets above there, because you don't know if it's going to, but if it does, you could say that would be enough confirmation to at least take it back to the resistance as that it created up there, and then maybe leave a runner to continue. And then you'll notice once we did have that big bullish push from that support, price made continued higher lows again and higher highs to push up. So that's how you can kind of anticipate or predict, whatever you want to say, that support could be forming here to then continue up based on how the candles are moving. So as we were coming up, we saw we continued to make higher highs and higher lows. And then when price wanted to come down, it started making lower lows and lower highs. So now price is starting to come back up, higher low, higher high, and price went up. So then this one would kind of be the same thing, but it's not really a break and a retest. It's more of just a really aggressive New York session. So same thing as before. When price came up, higher highs, higher lows, all the way up. Every single 30-minute candle did it on the way up. And then it looks like maybe we ran into some resistance here and price came down. And then when we come down, what happens? We get lower lows and lower highs. So price is moving up pretty aggressively. So all you need to wait for is either, if you wait for a bullish close, that would work. But if you see the higher lows and higher highs starting to be created again, maybe that's a good indication to get into buys as price should continue to move up if candles are going to be respected. We know sometimes they're not, like this wick here broke above everything and then came back down. So that would be one of those few cases where, okay, that one just didn't work out. But if we went through every candle, there's going to be more times than not that price does respect the previous candle. And there might even be some sort of resistance up here to the left. So you would have known not to jump in that. But with that being said, once this 30-minute here was broken and this low was also respected, there's a really good chance price will continue up to whatever target you may have mapped out. Because if it's going to continue up, it's going to continue to respect those highs and lows like that. So now we got some fake outs. Got a couple examples of these, just like just how the candles could sort of set up. So again, we see this was support formed, and what happened when support was formed? We made higher highs and higher lows, and price went up. But then we see this little resistance or this little support here formed again, and then more higher lows are formed. This one did break here, but we have some examples of the higher time frames. So this hourly low would have still been respected, and then price did continue up. So we see this candle closed underneath this resistance. So maybe there's a good chance price will fall down to support again, maybe break it. Looks like we kind of have some sort of bearish strength on our side, maybe. If we could see the higher time frame, maybe that would make these sells kind of make sense, and this whole move would kind of be a fake out or a lower high to then continue driving price down. But we know if support or resistance is formed, there's lower lows, lower highs, or higher lows. So with this breaking candle, a lot of times on the fake outs especially, if a candle closes and is never breached, meaning if it breaks to the downside and that low that is established is never broken, there's a really good chance it's going to do that fake out and reverse on you. So if we look, that low that was there on that bearish candle, the lower low and the higher low, this was never broken. Price broke the high and then made higher lows and higher highs and continued to the upside. So if you trade breaks of zones for like your entries and you get caught in fake outs a lot, a good indication that the chance of it being a fake out is a lot less likely is if that low that was established on that previous close is broken, whether it be this way or to the upside. There's a really good chance that if like a lower low is created or a higher high to that previous candle, there's a much better chance price will continue in the direction of your trade. And then same thing again, fake out to upside. So we see a really strong close, push off of support, closed above resistance. We could say a wick fill target here. Then we have clean traffic, so price should go up. But again, price never made a higher high. But again, we didn't make a lower low either. So we really didn't go anywhere just yet. But now on this next candle, we see another lower high, and now we see a lower low. So price couldn't go up, and now we're making lower lows and lower highs to go down. There's a really good chance we are going to break through support here. Because if we're not, then we're not going to continue to see those lower lows and lower highs. And if we weren't going to break support and we were going to actually break resistance and go up, this move already happened and it already tried to go up. And then this one happened and said, no, we're not going up. We're going to go down. So the fact that it tried to go up and couldn't means that if it tries to go down, it should have a much easier chance of going down because it couldn't go up. And then as you see, when we do actually get through the zone with the lower lows and lower highs, price continued to make the lower lows and lower highs. And then once it stopped, we see price kind of stops doing it here. We see higher highs and higher lows, and price starts to go up a little bit. So that's how you can anticipate like a fake out to the upside, and then how to participate in some sort of move like this, or at least understand what's going on with these candles. Or if like I said earlier, if you get stuck in the fake outs a lot, you're probably wondering how we closed above. We're at support. We couldn't break down. This one tried to break down, couldn't, got stuck at support, and we broke up. Why didn't we go up? The reason is there was no new high created to go up. So price couldn't go any higher. So that should help eliminate a lot of the fake outs. Sometimes it does stuff like this, and that just is what it is. You just gotta, if you follow your plan, it's not gonna hurt you too much. All right, next we got so a fake out to the upside, another fake out example, and this one actually kind of breaks what we talked about earlier, which would just be one of those times that price just does what it wants. And then anticipating a break of support as we do close above support here. So we see that we get the close above resistance, and we have maybe some clean traffic up to here. So maybe a target up to here. It's a good idea. So you take it on whether you get in down here or you get in on this candle here. Once it makes that higher low, which before this candle fully closed, it probably had a higher low and then it broke the top. But this is very unlikely, but maybe it broke the low, came back up, broke the high, and then came down. I highly doubt it, but it could have happened. And if that would have happened, you would have known that this break here, you might want to just wait on it. Because if it broke the low and then the high, it's not really sure where it wants to go. But more than likely what happened is it made a higher low and then it made a higher high and it didn't go up. So that would just be one of the probabilities of the trade just not playing out. But then if we look at every other candle after that, it's respected. So price comes back to support here. And again, support was created and formed. Every candle made a higher low and continued to push up until we didn't. So now we see this candle come back to support and we closed above. So if you're waiting for a close below, that's not going to do it for you. And then you're anticipating this is a weak bearish candle. We're at support. Maybe we created a high, now maybe a higher low, and we'll go back up. But if that's the case, you're going to see this being respected and this being broken and price going to the upside. But that's not what we see. We see this happen. So we see, if we don't see these candles yet, we're only seeing this candle start to form. We know this support is going to break if the low of this candle is breached. And then price will continue down to this support or whatever targets down underneath it. But with this area, when we created support, higher lows all the way up. When we come down, lower highs all the way down. So lower high, lower high, lower high again here. There's 3 in a row, and we have 2 lower lows in a row. So maybe this candle that technically closed above support with a low and a lower high, regardless of it being weak or not, if price breaks that and makes another lower low and this high is not breached, but this is breached, price is going to come down and then be breaking through your support, which is how you could sort of anticipate that move to the downside. Right, next. So yep, another fake out example. And then we're going to look at another support as well. Just lots and lots of examples and repetition. That's what trading is. And then at the end, we do have some multiple time frame analysis stuff to get a little more advanced in case you don't understand or the wicks confuse you when you go to 30 to 1 hour. So support, look what happened. Higher low, and we just continued to do that. So support was formed, price went up. Then same thing here. Granted, this bearish one did not make a higher high yet. So with this making a higher low to the previous, there's confirmation that we should be going up because we're still making higher lows, but we haven't made a higher high yet. So if we're looking at this candle as it forms, the idea would be if we respect this low and we break this high, that would be a nice move breaking through resistance to then continue up because we see we have bearish candle and some possible resistance right in here. But we know if this is support, we're going to get higher lows and higher highs and push up. And that's exactly what we got. So then here, we formed resistance here again. Looks like we are clean up into this area. We broke above, we closed. Price should continue to go up. But just like the last example, there was no further high created, and the lows were now being disrespected. So maybe price is going to continue to drop. So when you see this candle, you could say, okay, if we respect this low and we break this high, we're going to get up into this target we have mapped out. But if we break this low and respect this high, there's a really good chance that price is going to fall back to this support and more than likely tap into this support. Because this was kind of the low that was created, and then it was trying to go up to resistance up here, couldn't get there, so maybe this was making a lower high to this to then further drive down and touch the low, and your most recent low would be here, so price would fall to there. But obviously coming into this first support, we don't actually know if we're going to break this. We just know once we get under here, a good idea is that we should get in to this area. So once you fall into that area, maybe protect some profits, risk-free, whatever you want to do. But longer term, maybe your runner, you have at that next level, kind of anticipating since it couldn't go up, it should come down and break. All right, next one. So this is going to be the multiple time frame analysis. So we see how we have 1, 2, 3, 4 hourly candles we're going to look at. And we see how every time it made these higher lows and respected it. So price respected the lows 4 hours in a row. And we have it marked, and then we're going to drop into a 30-minute time frame and see what it looks like. So here is the 30-minute of what we were just looking at. So we see our 4 hourly wicks. This one was respected. Okay, makes sense. This one respected this one, continued up. But then this guy, he broke the low here and respected the high. So that would maybe be kind of like our fake out. So this is kind of our break above resistance here. This one closed above. And then we see this guy here respect the high, make a lower high, and then make a lower low. So maybe that is a fake out and price is going to start to come down. So it would look, we got that close above. And then maybe since we're breaking this low, we're going to come down, break through here, and continue to the downside. But we also need to be aware of how bullish everything is right now. So if we're looking at the hourly, we have one, I believe this was actually one as well. So we'll say 1, 2, 3, 4 hours of bullish movement, not a single bearish candle. So if we're on the 30-minute, we say, okay, instead of just breaking a low, since everything is so bullish, and we maybe want a little bit better confirmation, we wait and see for a bearish candle and then a new low. All right, so 30-minute time frame, there we go. Got our bearish candle. We got a lower high to that initial high, and we're bearish. But the other thing is we have a higher low as well. And it's not a super great close. So then we could say, okay, the idea would be for this trade, if we respect this high, just like we continued to respect highs over here, and we break this low, we're going to see price come down a little bit to whatever target we have mapped out, whatever the next area is. But price never broke the low. We closed back bullish again, and then we made another high and a higher low to go up, and price pushed up. So that's why waiting for the wicks to be broken kind of gives you that extra confirmation that since price is continuing in that direction right now, while it's breaking those lows and highs of the previous candles, you should continue to see more movement in that direction for the time being. Granted, that's going to be different and depend and vary depending on the time frame you're looking at, your trading style as well. But if you're just reading candles for short term, like scalping, 10 pips, 20 pips, it's gonna benefit you a lot. So I think we have one more. See, yep, got one more here. So we have a break to the upside, and then how to anticipate the move using the multiple time frame analysis. So I believe this was New York the other day. So what we need to understand is the 30-minute and the 1-hour wicks, because this right here, this mess that you see, told you exactly where price was going. Because we know what happens when we break through support. So first time we made support, we got a higher low. We came up, we made resistance, and we made a lower high and a lower low. And now we're right back at support again. But look what happened when we came to support. So this wick should tell this guy's giving you your first, okay, this is interesting. So we came down and we kind of have some movement to the downside. So maybe this bearish candle is going to continue and break through. But we have 3 higher lows here. Why is it doing that and not going up? Because we don't have a higher high yet, but we have these higher lows. So maybe it's kind of doing this wedge thing again. But we'll keep watching the candles and we'll see. So then we see this next one. All right, we get another lower high, but we also get a higher low and we're bullish. Okay, maybe this next one will break out and we'll get that new high, because as we see, we right now have 3 30 minutes, an hour and a half of price making lower highs. But we're also making higher lows every time. And then we see this candle come in and throws you off a little bit, because that one broke below that one, making a lower low. And still we have all these lower highs. So maybe we're going to see a break to the downside. But we see that we never really got past any of these wicks again. Okay, so that's weird. Why would that happen? So we're going to go and we're going to flip to a higher time frame for better confirmation. And now we see, okay, that 30-minute was broken, but we have 3 hours of price making higher lows, and then we get 4 hours of price, and then we do break up. So the idea for this one could have been, we see these higher lows on the hourly all happening 3 hours in a row. 30-minute also did it, but with one exception, and then it actually closed really weak as well. But we see 1, 2, 3, 4. So 2 hours of price did not make a higher high. So maybe since we're continuing to make these higher lows, especially on the hourly, that's good. That's strong confirmation. If we see a higher high form, we're going to see a break to the upside. So maybe once this one made another higher low and broke the highs of an hour and a half of price, we'll clean that up a little bit. It broke the high of an hour and a half of price. This guy did right here. And we continued to make higher lows for 3 hours. That price is going to start to push up and break to the upside, because if it wasn't, why didn't we break down when we had this lower low right here and this continued lower highs? So then you could have entered once this one kind of got above one of these candles and gave you that higher high confirmation. Or if it closed above or broke these wicks, that would have been a good entry as well. But you would have known not to get in any trade you shouldn't, because of what these candles are telling you. And if we look at the hourly, there's going to be a much clearer entry. So we see this one, and then we see this bearish candle. We're like, okay, we're bearish. We closed under hourly support. We're going to continue down. We have this wick to come fill, and then we got a nice target down here. But again, we got to look at what the candles are telling us. And they're telling us price is going up. It just hasn't happened yet. And we see this candle here and this candle here. No higher highs, but 3 hours of higher lows. So next hourly candle that makes a higher high, we're going to enter as it breaks that high. If we make another higher low. So when this guy formed, this one told you what was going on. This one kind of gave you the entry because it did what it was supposed to. So on this one, we could have had the same idea. If we break here and we make a higher low, we go up. and we get in a buy and we take it to the top. But as we see, we made a lower high. We didn't break up yet, so there's no entry yet. But we still have higher lows, so we're just waiting for price to tell us when it's going to go. And then we see this one, another higher low. Okay, if we break this high, the previous hourly, we'll have higher lows, and now we'll have some higher highs that we haven't had in 3 hours, and price should continue to move up. And then what happens? We get a higher high, get another higher low, another higher high, and price goes up. So that's how you can use multiple time frames like that to really get a better understanding of what price is doing. Hopefully this helped you. The next video will be more than likely a simulation going through this kind of stuff, either with myself or with myself and the group, in terms of how to kind of watch this happen live. If you liked it, be sure to like it, subscribe, comment, and thank you for watching.